Hi there, welcome to this week's Stockscores Market Minutes for March 7th, 2014. This week I'm going to talk about the importance of catching winning stocks early. But first I want to advise everyone of some upcoming events that we have in April in Calgary and Vancouver. The 8 Rules for Successful Investing is the name of the presentation. These will take place in Calgary April 3rd and April 5th, and Vancouver April 12th and 15th. Now, if you are not in Calgary or Vancouver, we will try to do a webinar version of this. And so if you go to the registration page at stockscores.com/learn-the-rules, you can either register for one of the Calgary or Vancouver events or the live webinar, which we will likely do later in April. Now, a quick point for the live events in Calgary and Vancouver. The first 500 people registered and attending the event will receive my book, The Mindless Investor, completely free, courtesy of Disnat. They've come to me and bought 500 copies of the book, and they want to give it away to anyone that registers and then comes to the event. So the first 500 registered will get the book for free. So make sure you go to stockscores.com/learn-the-rules to make that registration. All right, let's get into this week's topic, catching the winning stocks early. Now, more and more these days, the market is moving faster and traders are getting information sooner. Performance can be improved if you can find the hot stocks before the masses. What I'm finding is that if I can catch these hot stocks earlier in the trading day, I can really improve my reward for risk. Running the Stockscores market scan 30 to 60 minutes after the market opens can show you some of the early gainers and allow you to get in before many investors catch on. Getting in early improves the potential reward and lowers the potential risk. Now here's a stock that I found today, AMD, Advanced Micro Devices, and this is the daily chart showing that it closed at 395, and if we assume that support is at 370, then to the next level of resistance, which is around 445, 450, we've got about 2-to-1 reward for risk potential. However, I found this stock about 30 minutes after the market opened, and here we see an intraday 30-minute chart. And there you can see that now the entry, by finding it earlier, was only $3.80, which means that by the end of today, we were almost at 2-to-1 already. Now, I didn't really do anything different. I just looked for this stock earlier in the day and found it using the Stockscores market scan. All right, let me show you how I use the market scan each day to do this. There's a variety of ways. I might look for stocks between $1 and $10, so I can use the price filters for that. I've got the gain-loss filter right there. I can maybe look for something where we're getting a rally of greater than 3% over the last one day. I like to put a 5-day resistance to breakout and then set a number of trades, a minimum of 1,000. If you're looking just on the Canadian market, you can lower that to about 150. Run the report, and there instantly it gives me 50 stocks that are meeting those criteria. Now remember, I do this about half an hour after the market opens, so at that time the list will be shorter most days, and then you just cycle through the charts looking for stocks that are starting to show some activity. So here you can see at the end of the day, the stock has broken from boring sideways trading. That's what we want to see. But if we look at how that stock was behaving intraday, you can see in the first hour, it was already starting to trade abnormal volume and making a price move. Just on this stock right here, you could have got in under $1.30, and by the end of the day, it's at $1.60. That's a pretty good price gain just for doing the market scan earlier in the day. All right, let's get into this week's analysis. Here we have the chart of the SPY. And it is in an upward sloping channel. You can see I've drawn the upper and lower boundaries of that upward sloping channel. Almost at the top of the channel, but not quite there yet, so it still has some upside before it's going to encounter resistance. You can see that most times when it gets to the upper envelope of the channel, I mean, here it went through a little bit for a couple of weeks, but it generally falls back each time. So there you can see it falling back, and then of course we fell back here. Now it may not fall back for 2 more months. We are in the spring season when the stock market tends to be strongest, so I don't really see any reason to get too worried about stocks, at least on the US side. On the Canadian side, a little bit scarier looking because we are right at the top of that channel, and I do think that sets us up for a bit of a pullback. But I think what may be happening in the Canadian market is you're going to see some of the money come out of the large caps, which will bring the index down, and they're moving into the TSX Venture, which is really starting to build momentum. For the last 4 or 5 weeks, it's been moving up nicely, and look at the upside potential on the TSX Venture. Unlike all of the other North American markets where they're pushing toward new highs, the TSX Venture is really coming off of lows and has lots of upside. I think we could see a 20 or 30% move in the TSX Venture through the spring season. So definitely a nice place to be watching for opportunities right now. Treasuries encountered some resistance this week and sold off. That means interest rates went up this week, and I do think that we are likely to see Treasuries move lower, which means interest rates are going to climb a little bit until this chart gets down to support at the horizontal green line. US dollar really been getting beat up the last 4 or 5 weeks. You can see pessimism is the mood of the day. Falling tops on the chart mean pessimism, but the US dollar is at support where it should make a bounce. We haven't seen any signs of that yet, but I wouldn't think that we'll get a breakdown in the next week or two. Probably bounces back in the short term, but the longer term outlook remains pessimistic for the US dollar. Gold looking like it's continuing to make that turnaround. It's coming into some resistance from the October highs. I think it'll stall here. We could see a little bit of a pullback, but my longer term outlook for gold remains somewhat bullish. I think it's going to be a slow and steady comeback for gold. Not going to happen overnight, but it is improving week by week. Oil market has been rallying over the last number of weeks, almost to the top of that pennant pattern. I still consider this to be a long-term neutral pattern. It's really just a sideways trading process that oil is doing right now. The fact that we had a close below the open for oil and that really long candle makes me think we could see a little bit of a stall in the upward trend for oil, but I'm going to continue to call this one neutral. Fear got a little bit of a bump higher, likely because of events going on in the Ukraine. Of course, some investors will want to buy some insurance in the options market, and that's what drives the VXX. I think that we could see a little bit of a rally here in the VXX in fear next week, and that would coincide with a bit of a pullback in stocks. But again, big picture stuff, stocks remain a good place to be. So I've put a neutral rating in the short term on US and Canadian equities. Long term remains bullish. Bullish on gold. Short term, wouldn't be surprised if we get a bit of a pullback. That's why I've lowered my rating to neutral. Equities are in a long-term upward trend at this point, where a round of profit taking would be reasonable. Expect that soon. Gold continues to work on a turnaround, but with long-term pessimism still in place, I think it's going to take a little bit of time to build that turnaround. Oil is nearing the upper envelope of its pattern, where some selling pressure should materialize. TSX Venture is building optimism. Well, that has been the Stockscores Market Minutes for March 7th, 2014. Have a great week in the market and trade well.